Hi, thanks so much for joining in. We're talking about Your Money Matters on NDTV Profit because we understand that your money matters. This show gets you insight on everything from your investments to your expenses and even your taxes. Today, I'd like to talk to you about a new small cap fund that is on offer. It's not very often in the recent past that we've been able to do that because most mutual fund houses do have small cap funds. In fact, Mirae Asset Investment Managers currently has a new fund offer out for a small cap fund, and I'm going to be talking to the fund manager of that fund to tell you about what the thinking is and why they're launching right now. Varun Goel, who's a senior fund manager equity at Mirae Asset Investment Managers, joining me now. Varun, thanks so much for taking the time. Help me understand from a product launch perspective and to fill in that gap in your offerings. Why now?
Yeah, good afternoon, Alex. Thank you so much for having me on the show. I think broadly, if you look at the markets, we have seen, in the last 20 years, small cap space is one of the best space for long-term wealth creation. If you look at the index itself, the Nifty Small Cap 100, Nifty Small Cap 250, they've delivered over 16.5%, 17% IRR over a period of 19 to 20 years. And so many active fund managers in India have added alpha over and above what the index has delivered. So we believe this is a great asset class for wealth creation, and therefore every investor should have some allocation to it. Of course, how much allocation is a function of investors' risk return appetite, his investment objectives and things like that. But broadly, we believe this is something which has a lot of merit for long-term wealth creation. In the short term, of course, we are seeing a lot of volatility in the markets, and we believe that calendar year 25 could be the right year to lay the foundation of a strong small cap portfolio, which could then see good earnings compounding over the next 4, 5, or even longer periods of time.
Okay, so Varun, is it that you felt that prior to maybe August or September of last year and the year before that, it was a little too difficult to launch a small cap fund? I'm trying to understand why you've not launched one in the intervening years.
Yeah, I think there are several reasons. One, of course, if you look at the markets, after every 4 or 5 years, you get that 15 to 20% kind of a shakeout. If you remember, 2016, 17, 18 were great times for the market, especially for the small and the mid cap space. And then I think we had 1.5 years kind of correction of around 20%. FY19 to FY24, absolutely phenomenal in terms of compounding in earnings in all large, mid, and small cap segments, and resulting in great returns. And of course, what we are undergoing at this point of time is another round of correction. Large, mid, and small, all three market capitalizations have corrected somewhere between 10 to 15% from the top. Can they correct another 5, 7, 10%? Absolutely. But we don't know whether, when, or whether it will. So we believe this is a great time to build a good long-term portfolio. That's one. Second, I think also in terms of organizational capabilities, just 5, 6 years back, Mirae as a fund house had 35, 36,000 crores of AUM in 2019. Today, as we speak, we have almost 2 lakh crores of AUM. We have 12 research analysts, 5 fund managers. So we have a full range of capabilities available, to go out and do bottom-up stock picking in the small cap space. Today, we have more than 200 stocks under coverage, and therefore we believe as an investment team, we have the right capability. I, of course, joined the company in the month of March last year, and now been managing the Flexi cap fund so far, and this is the second fund that I'll be managing.
Good. So, okay, so that gives us perspective as to why now. The other aspect that some people have said, Varun, and it's a challenge in the small cap space in particular, but looking at your presentation, your product presentation, you argue against the challenge of availability of options in the small cap space. The argument has been that free float is limited, and so deployment of funds becomes difficult. But since you are starting out and you will likely be nimble in the first few months and years even maybe, it's a good time for you, do you think, Varun?
Yeah, absolutely. So let's first understand, what is the definition of small cap. In the last 5, 6 years, the definition itself has changed very meaningfully. So if you see the definition, as Amphi gives it, it is the 251st stock onwards, right? So in 2019, it used to be sub 9,000 crores. in market cap. Today, as we speak, the 251st stock has a market cap of around 32,000 odd crores. That is more than 3 times of what it used to be in 2019. And the 500 stock goes to almost 10,000 crores. And what we are seeing is our range of the stock picking available will go down all the way down to 1,000 stock in market cap, which is 2,700 crores in market cap. So what we have is 750 stocks, between let's say 1,000 stock and 251st stock, which is 2,700 crores in market cap to 32,000 odd crores in market cap. And as you can see, the number has become fairly meaningful now. And what used to be the definition of mid cap, 6 years back, is now the definition of small cap. So which means two things. One, our perception of risk when it comes to small cap has to change. Second, when you're starting out with a new fund and a smaller fund in terms of AUM, all we are looking for is identifying the right 50 ideas, and needing 30, 40, 50 crores of liquidity in those 50 names and creating a portfolio out of that. So we safely avoid the most expensive, the most popular small cap names and go out and create a medium term portfolio where we believe that earnings growth are good, return on equity, return on capital efficiency is good, and the valuations are reasonable.
Okay. Help me understand the ideal size of your portfolio in the current context, Varun. And are you at all concerned that you are going to be buying stocks that are relatively higher in terms of valuations? The reason I'm asking is, even as we speak, you have the equity markets that are punishing stocks in a big way, even if results are more or less in line, or even if it is a very small miss on the expectations, there is a huge correction that is taking place. So is that at all a concern that valuations may be a little stretched?
Well, there is no doubt, Alex, that there are pockets of froth in the market. You have some PSUs, railways, defense stocks, some EMS companies which have run up to very, very high valuations over the last 2, 3, 4 years. And I think that's something that we'll definitely want to be very, very careful about. Having said that, like I said, there are more than 750 names in our universe, and all we are looking for is around 40, 50 good ideas. With the ticket size of investment, let's say we end up raising 2,500 crores in the NFO, and that's really what we are going for. We want a strong foundation of the fund in the first year, and we will go slow in terms of AUM. So we are looking at for 30, 40, 50 crores per stock, and that is something which we believe is very doable. We can safely avoid the frothy stocks, the stocks where valuation still remains a challenge. But let me also tell you something. While the index may have corrected 13, 14% from the peak, there are stocks which have corrected 30, 40, 50% from where they were in last year in August and September. So I think definitely there are pockets of value emerging, and the last 10% of the fall, it's almost impossible to time. Yeah. And we believe it's a great opportunity to go out and start building that portfolio.
Okay, so good. That perspective is useful. Also, to the point that I was asking, in terms of the ideal size of your portfolio, you were saying 30, 40 crores. So that kind of answers if you're saying 2,200. But still, can you spell it out?
Yeah, so from an AUM point of view, if you're asking me, so during the NFO, let's say we raise around 2,500 crores. If I buy 50 stocks, if you have a portfolio of 50 stocks, then on an average, we are looking at, let's say, 40, 50 crores of size, in an individual stock. That's what I mean when I say, 30, 40, 50 crores of liquidity in a single stock. And so if you compare it with funds which are 20,000, 30,000, 50,000 crores in size, there is a big difference, because some of the larger funds need, 300, 400, 500 crores of liquidity in a single stock, even for a 1% position. And let's say we start with 2,500 crores. For a 2% position, we need only 50 crores of liquidity. So our ability to get in, go further down the curve in terms of ideation is much higher, and our ability to exit or do profit booking would also be much higher than some of the larger AUM funds.
Okay. Help me also understand the churn that you're comfortable with. Is it going to be different from the other fund that you operate, which is the Flexi Cap fund? One would assume that small caps, you'd have to be a little more nimble.
Yeah, so typically what we are looking for is buying those ideas which can deliver a 15 to 20% earnings growth over the next 3 to 5 years, have good capital efficiency, and available at a reasonable valuation. The idea is to hold the stocks for a period of 3, 4, 5 years. Having said that, it's an actively managed fund, and wherever needed, we will carry out, we will churn the portfolio as and when needed. There are a lot of interesting new ideas coming in. So last year we had 70 small cap IPOs. This year again, it looks like we will have somewhere between 50 to 100 new small cap IPOs, and therefore there's a lot of new addition coming in to accommodate that. Yes, there will be some churn. Sometimes, some ideas you go wrong and you need to go and get out of that. Some ideas you need to book partial or full profits. So I think there will be some amount of churn, but the idea is to, identify the stocks and let it compound for the next 3, 4, 5 years.
Okay, Varun, and I think we've kind of captured what the small cap fund is going to do, but you mentioned about the team that you've built, and you mentioned about the capability and the kind of breadth of your coverage. So I'm very curious about the insight that you can give me on how you see things right now, where somewhere about maybe 30% into the earnings for the third quarter so far. What have they told you so far?
Yeah, so I think if you look at the year as a whole, FY25, we are looking at earnings growth of low single digit. I think we've seen a cyclical slowdown in India. The Q2 GDP growth was 5.4%, while we may see an uptick in Q3 and Q4, but we are unlikely to go to 7% anytime soon. So I think two things are happening now. One is the government infrastructure spend, which was a little muted in the first 7-8 months of this fiscal, has started to catch up, especially in terms of roads and power. The second, I think we had a good monsoon. The reservoir levels were full, so we're expecting a fairly good Rabi crop output. The crop is now beginning to get harvested. The farmers should have money in their pockets, by March, April, and that's when we expect some of the rural consumption stories to also pick up. So our sense is, while FY25 earnings growth is going to be fairly muted, FY26 should see 11, 12, 13% kind of earnings growth coming back to the Nifty numbers, and of course, small caps and mid caps can do better, and that's really when we believe we should see the markets also reacting positively. In the short term, of course, we have 4 big events. One is the earnings season, we have the budget, we have the RBI policy, and of course, there is an ongoing event related to the new administration in United States and some executive orders coming out of that. So markets will have to navigate these 3, 4 news flows in the next 2, 3 months, which could cause some amount of volatility. But we are fairly hopeful that the earnings growth next year should be much better than what we saw in FY25.
Okay. Can you help me understand the construction of your Flexi Cap fund as things stand right now? The reason I'm asking is because that generally is a gauge for investors to understand how you're perceiving risk and opportunity in the market. So that is the lens from which I'm asking.
Yeah, so currently we have around 60% allocation in Flexi Cap to the large cap space, and the remaining 39-40% is in the small and the mid cap space. So clearly, we see value. We have added quite a bit of small and mid cap ideas in the portfolio in the last 6 months. And we definitely see that increasingly, with the correction happening, more and more opportunities are opening up. In fact, our large cap exposure has actually come down in the last 6 months, and we believe, from a 3 to 5 year perspective, this year, calendar year 25, will be a year to pick up those right bottom-up stories and make their presence felt in the portfolio.
Okay, so would it be fair to say that for a little longer, while there are opportunities, you will still continue to be a little risk-off and cautious?
Well, like I said, every 4 or 5 years, you have a 15 to 20% correction from the peak. We have already seen 10 to 15% across large, mid, and small. Can we have another 5-10%? Because of the events that I mentioned, we could, but we don't know, if and when that will happen. So we have to keep on, different stocks, different sectors bottom out at different points of time, and there is no one time point which you can say the whole market will not bottom out together. So I think interesting opportunities are beginning to emerge, and we definitely want to take advantage of that.
Varun, thanks so much for giving me that perspective, and wish you all the best for the offer that you have. Look forward to speaking to you again in the near future.
Thank you so much for having me, Alex. Thank you.
Pleasure. All right, so that was perspective on the new small cap fund, and indeed that should give you some idea of how small cap fund managers are also thinking, or equity fund managers to that point. Because you look at the markets right now, it's tough to gauge which way it's heading. and you're not likely to get an idea of the longer term trajectory, at least for the rest of the year, from what you're seeing on a daily basis. So this is something that you should take with you. Now, the second part of this conversation has to do with tech, and I like to call it Tech Tuesday because it gives me an opportunity to talk to experts in the space about consumer tech, tech that you use, and tech that you spend your money on. Joining me to talk about something what I think is very interesting is Ershad Kalibullah, who is the host and executive producer of Kraken Tech. Ershad, thanks as always for taking the time, and pleasure having you on the program. The concept or the talking point that we have today, I thought very interesting, is does it make sense to still go out and buy the basic iPhone? What is your answer for that?
So basically, yeah, I mean, thank you for having me on this show, Alex. That's obviously the first thing I want to say. But yeah, I mean, we were having this conversation on the sidelines, and I told you that, see, Alex, I don't think it makes sense to buy the base iPhone 16 that launched, I think, late last year, anymore, primarily because, Android phones, especially Android flagships, are getting way better than iPhones, and they're offering far more value as well. And there are multiple reasons for this. It starts off with the fact that one of the biggest advantages for the iPhone always used to be the latest and the greatest chip, which is the most powerful chip ever used on a smartphone. But with Qualcomm, introducing the Snapdragon 8 Elite, which is the flagship chip of choice for most Android brands, including for Samsung, which is going to launch the S25 series pretty soon. That chip has been so powerful and so efficient this year. By efficient, I mean it's power efficient and offering great battery life. That advantage that the iPhone had with that chip is with its A series of chips, that's also slowly going away, and Android phones just make way more sense now. And if you look at the base iPhone, it's generally, constrained in terms of specs, right? I mean, you don't get the latest and greatest display. You don't get something like high refresh rate display, which Apple calls ProMotion, and which, for us tech nerds, it's 120 hertz refresh rate, right? I mean, that is something that's available on Android flagships, for lower the price than an iPhone, and which is not available on the iPhone. And apart from that, you also get only a couple of cameras. Well, the cameras are great, no doubt about that. But, Android flagships also offer you the zoom lens, which matters to a lot of folks, apart from the primary and the ultrawide.
So, yeah, Ashad, I'm looking at my own phone, and I'm looking at all of the features that you've just spoken about, because this is exactly what I have. I bought it a while back, so I'm not in the market right now, but you're breaking my heart, man. You're saying that
that's what I do. I have to show you the reality, Alex. That's okay, the thing. But the thing,
yeah. But let me ask this, right? You're talking about a lot of people when the new iPhone gets launched, they will generally go out and buy the previous version because usually there is a price differential and it becomes more attractive at that stage. Even when they cut the price, is that what you're saying? Even when they cut the price, it should not be bought?
That's, I think, a different question. I'm talking about the latest generation iPhone. But yes, I mean, since you've brought that up, yes, iPhones do get deeply discounted these days, especially the previous generation iPhone. For example, the iPhone 15 now will be deeply discounted. In fact, there was a January Republic Day sale on Amazon and Flipkart where the iPhone 16 lost its value really quickly, and it's gone down to, I think, 63,000. Think of those people who bought the phone just like a couple of months ago at 80,000 rupees. It's just, even the value of iPhones is going down primarily because they have to keep up with the market forces and the market dynamics, where Android phones are obviously offering great value. But the thing with iPhones is that, an Apple fanboy or somebody who likes Apple products, they will keep buying an Apple product. That's one. And the other thing is there's this premiumness associated with Apple products that people think makes it the best, in the industry, which is true to a certain extent. But Android flagships are catching up, man. I mean, we have to give it to them.
But to the point where, the next iPhone comes in, it's anyway several months away, right? We're talking about maybe September of 2025,
Every year.
right?
Every year.
So therefore, there's still a long time. And what you're saying is still that time, it does not make sense for you to go out and buy the base model of the 16.
No.
But if you're going out and buying the Pro and, maybe one of the others, the Pro and the Pro Max, that still makes sense, right?
That still does make sense. Yes, Alex, it does make sense primarily because the Pro Max is a far more powerful device. It's got capabilities that make it worth buying and also set it apart from the competition in terms of the fact that you can do ProRes video recording, which is something that a lot of us nerds care about because you can then in post make the footage look almost film grade. If I'm not mistaken entirely, I think 28 years later, which is a movie that's coming really soon, the sequel to the 28 Days Later, is shot entirely on the iPhone 15 Pro Max. So the Pro Max series of phones, yes, definitely, I would say.
Usually, if you're buying something like the Pro or even the Pro, and especially the Pro Max, you're probably in the line of business that requires that kind of professional video camera, or
not necessarily. Not in India.
Or you have a substantial amount of money, but having said that, if you're talking about the base model of the iPhone, Ershad, the alternatives that you suggested, is there a big differential in the price as well? Because the iPhone base model is 70,000 rupees.
No, it's iPhone base model technically is 80,000 rupees retail, but yeah, obviously, I mean, you can get it for even lower than 70. Actually, you can get it for like 65, 64. Now, at that price, yes, you do have Android flagship competitors in that price range. For example, the recently launched OnePlus 13 is the one that comes to my mind immediately. And the OnePlus 13 is more expensive than the iPhone 16 if you consider the discounted prices. If you don't consider the discounted prices, then it's not. But for even if it's slightly more than the base iPhone, it does offer you a whole lot more. Like it offers you a 2K display, it offers you 120 hertz refresh rate, it's got an LTPO panel, the brightness is crazy, you get crazy battery life, you get fast charging, which is something that the iPhone will never have because Apple doesn't believe in that. You get a proper telephoto camera, you get performance that is better than the iPhone now. So yeah, I mean, I've put it out for you. Now you decide. In fact, okay. One more thing. Like, one of the things that Apple fans care a lot about is iOS.
Yes.
Obviously, the software is fantastic. I like it too. No doubt about that.
And the ecosystem.
And the ecosystem. Still unbeaten to a large extent. Yes, no doubt about it. But what OnePlus went ahead and did is that, with their operating system is called Oxygen OS, right? I mean, it's based on Android, but they have something called Oxygen OS on top of that, right? Now, this operating system has features that are there in iOS 18. For example, there's this dynamic island thing where the live activities go. There's like if you're ordering something from, say, Swiggy, and then you can track the time, how much duration is it left on the on the live activities. That thing is there on Oxygen OS. So basically, Android flagship, brands also want you to, switch away from an iPhone and buy the Android phone. Obviously, that's just, no, it feels like they're copying, but they also have their original features.
Yeah,
this is just to attract the others.
I get that. So, but in your experience, how many times have you been able to convince somebody, Ershad, to move from the iOS or from the iPhone to Android?
Zero.
Okay. But you're saying that. So, but
see, my answer is specifically for. My point is specifically for folks who are trying to buy their first iPhone and probably already on an Android.
Okay.
Just buy an Android flagship instead. Just don't buy an iPhone. Just buy an Android flagship instead.
If you own an iPhone, if you bought, say, like me, if you bought a 16 or if you bought a 15, then how many base models would you wait to pass till you buy the next one? Yes, to change the phone.
Yeah, so basically your change cycle. Basically, with an iPhone, the best part is Apple provides the longest support and it also lasts really long. One of the reasons why people buy iPhones is that because you can trust it to function really well. Although I do see a lot of people facing problems with iPhones also nowadays. That's a different topic. I can keep talking about that as well. But the point is, at least 2 years, at least at a bare minimum 2 years before you change your phone to the next iPhone, or 3, ideally.
Ideally. All right, Esha, thanks so much for joining in for that engaging conversation. Hopefully you've convinced a few people and you can move up from zero. Thanks so much for joining in. And that brings us to the end of this conversation and indeed the show, Your Money Matters. Do stay tuned. Lots more coming up on NDTV Profit.